Welcome to Djji Tutorials. Here's a simple and very detailed explanation of how to identify ROI, which stands for Return on Investment, and what to look for if you want to invest in a company. This is especially helpful if you're just getting into investing or reviewing a financial update. ROI stands for Return on Investment. It tells you how much profit or loss you made compared to how much money you put in. It's a way to measure if your investment was worth it. The formula for return on investment, or ROI, is ROI equals net profit divided by initial investment, and then you multiply by 100. Let's say you invest $1,000 in a company's stock. A year later, you sell your shares for $1,200. Gain from investment, $1,200. Cost of investment, $1,000. Profit, $200. Using the formula for return on investment, ROI equals 200 divided by 1,000, and then you multiply by 100. This means you earned a 20% return on your investment. Before you invest in a company, you want to make sure it's financially healthy, well-managed, and growing. Here's what to look at. Revenue equals the total money the company earns, also called sales. Net profit is what's left after all expenses, also known as net income. Look for companies with growing revenue and consistent profits. If revenue is going up year after year, that's a good sign. This shows how much of the revenue becomes profit. Here's the formula. You calculate margin by subtracting the cost of goods sold, or COGS, from the selling price. Then, you divide the result by the selling price and multiply by 100 to get the profit percentage. Higher margins mean the company is efficient. If two companies make the same revenue but one keeps more as profit, it's doing better financially. Check the company's debt-to-equity ratio. Too much debt can be risky, especially if interest rates rise or revenue drops. Look for companies with manageable or declining debt and strong cash flow, the money it brings in regularly. RO tells you how well the company uses shareholders' money to generate profit. The formula is RO equals net income divided by shareholders' equity. A higher ROE, like 15% or more, can mean the company uses its resources well. The price-to-earnings ratio tells you how much investors are willing to pay for $1 of the company's earnings. The formula is, the price-to-earnings ratio equals the share price divided by earnings per share. Compare PE ratios to other companies in the same industry. A very high PE might mean the stock is overpriced. A low one might mean it's undervalued, or that something's wrong. Is the company selling something people need or love? Does it have a competitive advantage, like a strong brand or unique product? Ask yourself, would I use this company's product? And would I recommend it to others? Look at who runs the company, the CEO, the CFO, and the board of directors. Are they experienced? Have they made good decisions in the past? Good leadership can turn around even a struggling business. On the other hand, bad leadership can ruin a strong one. Is the company in a growing industry like tech or renewable energy? How does it compare to its competitors? Investing in companies that are leading their industry can be more rewarding than those that are falling behind. Some companies pay dividends cash to shareholders every quarter. If you want steady income, check if the company pays regular, reliable dividends. Check for recent news, lawsuits, product recalls, or bad press. Read earnings reports and investor calls, which are available on company websites or SEC filings. Bad news can hurt the stock, while good news and strong plans for the future are positive signals. Rising revenue and profit shows the company is growing. High profit margin means it's efficient. Manageable debt lowers financial risk. Strong ROE indicates good use of investor money. A reasonable PE ratio helps avoid overpaying. Product or service demand drives future growth. Strong leadership enables strategic decision-making. A growing industry offers better long-term potential. Reliable dividends provide income, if applicable. Clean news and reports help avoid major red flags. Please share this information with other students who are interested in financial investments.